Hi Sanjeev sir, can you hear me? Sanjeev sir, your mic is on mute.
Now it's okay?
Yes, yes, it's perfect, sir. I can hear you loud and clear, sir.
Okay.
Awesome. So, शुरू करते हैं, sir. First of all, thank you so much, Sanjeev sir, for joining us tonight, taking out time from your such a busy schedule for us and helping us learn from your experiences, your wisdom, your knowledge. And I'm really, honestly, a big fanboy of yours, and I'm really excited. I've been getting jitters since evening. I actually, honestly, took an off from office early today so that I can get prepared for tonight's podcast.
Okay, okay. Thank you for all that. And not bad. What to do? This is in my DNA. I never say no to anybody, and especially on markets. So, this is a good time for people to be contrarian and ignore the noise, because the noise will never let you buy, and you will miss out on, longer times.
Perfect, sir. Perfect. So this is what we are here for. Please, I would love to. I won't take any time. Of course, you need no introduction, so I'm not going to waste any time on that. Please, please help us understand what is going on in the markets right now. What does your analysis say, sir?
Okay, so should we start?
Yes, yes, definitely, sir.
Yeah, so good evening to all. Good to be back on Twitter Spaces. Uh, you know, I've been traveling for the last 10 weeks constantly, and even on Saturday, Sundays, I'm in some, smaller town, and that is where the real SIP and our bread and butter works. Bombay, Calcutta, Madras, Delhi are very well known places, and all the high HNIs are well versed with what the market is. It's the retail investor who needs hand holding, and he has decided, mass scale, that equity as an asset class is going to be there in his portfolio. We all know the four asset classes: real estate, gold and silver as in bullion, and fixed income, and fourth is equity. Equity has been missing in Indian portfolio households for years. Out of a population of 130, we still have just 9 or 10 crore demat accounts, which has steadily risen in the last 2 years. Gold is a no-brainer, but that's emotional, because what comes in never goes out. It's all thanks to the Lakshmi of your house. Fixed income has limited returns which cannot beat inflation, and real estate, you make a one generation to make a house. So that leaves you just with equity, where returns, there is risk, but you can even moderate 1,000, 2,000 rupees which you normally spend on a movie hall to go into a good asset class which gives you ownership. The biggest catalyst of equity is ownership. Till you don't own a stock, you can keep climbing mountains and keep being bearish for all your living days, that I don't own. Because if you don't own stocks in bad times, then you are not going to be there in the good times. So at 18,500, even though there was a lot of froth, nobody wanted to sell. That is called typical greed. And at 15,200, you had the money, you had the opportunity, but smart speakers like me will not let you buy. So the fear is so adamant that globally you are seeing everyone talk of a recession and bear markets. This is typical of what happens when you go up too fast too soon, and we all know the catalyst for that was the you know amount of money printing by the US and some of the other central banks. India was in no way printing money. All we did was cut the repo rate by 90 basis points, which we quickly have reversed. So we are in a very I would say once in a blue moon position, where inflation numbers today, IIP numbers, all are pointing on robust industrial growth. Secondly, the big headwind was crude, which is again back to 95. Again, if you guys have been hearing me, I tom the guys who were calling 150 and 356 on crude, and I said first we'll see 90, then we'll talk about all those number or page seekers. Why come out with such drastic numbers unless you just want to get attention? So realism is not dawning on a lot of people, and they've been caught up in the headwind of rising rates, inflation. But remember, this is once in 70 years in the US and Europe. The real elephant in the room is Europe. They are far too dependent on Russian oil and gas, and that adjustment is not taking place in a hurry. The logistics is far too superior for it to change overnight. India is in the best spot because we are both good with US and the USSR. Now you can imagine Reliance accepting that they are getting oil at $80 means that you are actually getting crude from Russia at $80. Today you are talking of rupee parity at trade with Russia and Iran. You are talking of Ultratech buying coal from directly from Russia. There are 8 banks which are in talk with Russian banks who have not been sanctioned for more credit, and I can go on. But all this is macros. What do you own? 15,200 is 16,200, and it happened very fast because that was the oversold nature of the market. Where do we trend from here? We all know there is a big inflation number due tomorrow, and everyone is tom-tomming from 8.8 to 9. I'm not an expert on that, and I'm not looking for the next 2 days reaction. I think a large part of all, negative news is built in. Crude falling today, our inflation coming lower means that equities, particularly Indian equities in the Asian or the emerging market context, will stand out. The only other caveat is that because of a weak euro, which is at parity with the dollar, our currency continues to be on a weaker note. But as a tailwind, that should be more headroom for exports. On the other side, the most loved sector in January, which every FI over owned and over, they over put out reports, was IT. And suddenly, in 6 months, when those stocks are down 40%, they are saying IT is the worst place to be. I beg to differ. I think numbers from TCS or today HCL Tech have shown you some margin attrition, but that's more to do with attrition on a wage inflation bill, which is caught up. We think that will stabilize in the next quarter or so. There is going to be back a lot of workforce joining back, and that is a problem. Workforce is not easily available, especially in high tech, and because of inflation, people have shifted jobs and so on. But see, these are all passing storms. If you can weather the noise, then you are getting HCL Tech at 13 or 14 times 1 year forward. TCS itself is now given you the correction after 2 buybacks. And I think a large part of the mid cap IT stocks are giving you very good numbers, which are foreseeable. The Dow itself, from which led this decline today, is up 107 points from a low of 200 points, and so on. So no, every day watching or doing this will not help. You have to weather the storm, and there is nothing called timing the market. It is only called time spent in the market. Unless you are a very fast trader who trades in and out and who knows how to get in and out. So if you are not doing that, then you have to build an asset class called equities. And if you are a first time investor, there is no better time, because SIP flows are constantly at 12,000 crore a month, and there is no stopping that. The retail investor is the backbone who's putting his money where his mouth is, and I see no change in that. Already at a time when the index is 16,000, Maruti, which was 7,200 at 18,500, is 8,600. Mahindra, which was 750 at 18,500, is at 1,200. And so is Eicher Motor hitting new highs, which tells you that the biggest consumer discretionary or rate sensitive autos are seeing the best times in the last 3 years. I was just in Nasik and Shirdi and the whole belt of Maharashtra, and I saw what was going on in Mahindra or Tata Motors. There is such a strong pipeline that they feel they cannot take the next 3 years to meet up the demand. We all know semiconductors and the chain of logistics, but that is getting some sort of semblance. Demand is at a high. 2.5 lakh car Maruti has in waiting. The new Mahindra has a 2 year waiting. 8.5 lakh motorcycles in all waiting, and EVs are going hand in hand with CNG efficient cars doing well. So autos continue to be ruling the roost. So are the banks. We know that in the initial phase of rate hikes, CASA ratio and the ones which have more cash will see more liability franchise gain. So NIMs will be high, and credit, according to State Bank chairman, who's the largest book in the world in India, he says the second half of this year may be the best in the last 16 quarters. Rajiv Bajaj of Bajaj Auto announces a buyback in which the management does not participate themselves, which means in a way they are paying back 3,000 crore or 2,500 crore from the most conservative group in the whole market, and that tells you that they are realizing their stock has efficiency and they want to pay back investors. So I can go on this. Now, obviously, I am more to be a bull in the market, and I've always stood my ground, mostly being wrong. But that's the way markets are. If you can ignore the noise, then I think the next 6 months may actually pleasantly surprise on the upside. The other caveat would be that Russia has done what it has to, and they've landlocked Ukraine. You hardly pay attention to what's going on over there. Wheat prices have fallen 54% from copper is down 34%. Coal market very well for India, which is a net consumer. And inflation and commodity sell off means that the end users are in very, very good news. So you have to build your portfolio. If you are doing SIPs, please continue with it, because good or bad times, SIPs are going to be an averaging out. If you are building new portfolios, we'll suggest some ideas. But I truly think that the worst may be behind. And if we can ignore the noise, then we should be well on our way. Now, the only other caveat is that the Fed, which was behind the curve and which has been extremely, now acknowledging that they couldn't catch on to the inflation trajectory, are now super hawkish, and that is what is going to be the only what we which we call little bit of a headwind. And I think that 75 basis now, and maybe then 50 or 25 in September, depending on data, which I think should surprise on the downside, given that food inflation and oil are lower. But I am not an expert on that. I also think that the dollar is heavily overbought, and once you get more stability on the European side, because there is a divided opinion on oil and gas and supplies, that should stabilize. So I would say by the end of July, we would have weathered a lot of the noise and the events, and would look forward to earnings and other catalysts. Talk of a recession is definitely on, because one quarter we've already gone into negative growth, another quarter is viable, but it will be a short recession. And India will definitely be one of the bigger gainers. Now, our whole system works that we've absorbed 3 lakh crore of selling by the FIs, which is tremendous. In my 33 years, I have never ever witnessed this sort of relentless sell off being absorbed by the retail investor. And now the smart money or the smart people who come in blue collars, they talk of that the retail investor is soon going to say that he's losing money and he will withdraw, and all this humbug of retail investor will fall. Well, I beg to differ. The retail investor is not going to change course. He's here for the long term. And from my interaction, if I've been 9 weeks across the board in smaller cities from length and breadth of the country, retail investor is putting where his mouth is, and he's seeing no change in his allocation as far as equities go. Yes, the volatility does hurt, but that's for the trading side. What are going to do well? As contrarian, I think power is in the best pace ever. You've seen NTPC, ABB, Siemens, Cummins all hit new highs. You are seeing auto do extremely well. You're seeing the large cap banks come back. The HDFC merger is getting attention, which is going to be done. So I think there are enough catalysts aside from Reliance, which was first touted to be that it was only Reliance which was single-handedly holding the market. That also with NGC has seen a correction, and yet we've scaled 16,250 or 300, which tells us that the other sectors, particularly banks, infrastructure like L&T are back in the reckoning. I still think IT will surprise on the upside once you get a caveat as a hedge against the rupee. And we see that tech spending, particularly from the IT majors, has no change of course. In fact, they are talking of AI and cloud computing gathering more steam and so on. Uh, I think if you made 4 stocks as your portfolio or a SIP for the weeks, you could be richly rewarded. One of them would be, the first would be DLF. I'm very bullish on real estate because smart money with gold at 50,000, 55,000 will see real estate is seeing very strong demand. DLF itself in Delhi has monetized all the pending land banks it had. Magnolia strong traction, there is no fall, and they've monetized even the small plots which they own into single 4 4 5 5 floors which they are selling. So DLF is well on its way of monetizing all its assets, cyber city, the rental income, the REIT, all these are in course. DLF, according to me, can be a no-brainer along with Godrej property. I am very bullish on real estate, and I think that even though rates are slightly higher, the demand for real estate is going to be very strong. As a corollary to that, HDFC and LIC Housing become good mortgage companies, and you have the whole gambit of input costs like cement, steel, which will do well. Ambuja Cement. You've seen Adani has bought both Ambuja and ACC at the at the click of a hand. 82,000 crore has been managed in just a week, 10 days, and now Ambuja will be the real bellwether. Given that 35% cost of cement comes from logistics and power, for Adani, those are no brainers. Both Adani Power and Adani Port are in house. Ambuja has 28 million ton capacity. It has a large part of it goes through the logistics of sea, and they will be in a very, very sweet spot. So Ambuja would be my second dark horse, which can go all the way back to 550. Third would be HCL Tech. I think the numbers today are definitely online. A lot of the bad news is already in the price, hitting 14-month low. At 1 year forward at 13, 14 time, it becomes very, very yield. The buyback by the management at 1350 just few months back gives me the confidence that HCL Tech could be a dark horse. 1200 rupees coming in the next year. Plus, you are on one of the third largest IT players in the country. The fourth play would be Kotak Bank. I think banks are doing well. Kotak is in a very, very sweet spot. Its retail loans, NPAs are at the lowest, and the retail loans are growing. And it has been one of the outperforming banks, even though slightly expensive. So these four would make up my, which I could recommend off the cuff for a sip. And I'm very sure in the next 6 months you'll make good returns in these stocks. On mid caps, State Bank and Bank of Baroda will stand out in the PSU banks. ICICI stands out in the large caps. Larsen and Toubro, Siemens are very attractive on the infrastructure stroke power play. I am very bullish on a stock called IRB Infra, which has almost 22,000 kilometers of roads under the under monetization as far as and you know that FASTag and local conveyance has become huge. You see the traffic on roads, particularly in intercity and across the board, and FASTag being compulsory and toll tax being linked to inflation. Their numbers are steadily rising. IRB is now owned 49% by government of Singapore, 16% by Spanish pension fund, and sovereign funds putting money means the credentials have to be very, very good. That could be a dark horse which can even double in the next 2 years. Aside from that, we think that select pockets of real estate, banks, autos, infra are out to outperform. Metals as a contrarian, given that Tata Steel came out with net profit of 40,000, it trades at a market cap of 1 lakh crore, is 2.5 times, and 40,000 crore was not generated in the last 6 years, all profit put together. So I think that a large part of the rally may be done with because of this control on exports. But if we are going to see reconciliation and a lot of stalemate on Russia Ukraine, then the rebuilding of Ukraine globally, assets coming back. See, in the last 20 years, there has been no capacity addition in oil, in cement or steel. So Tata Steel becomes a no-brainer. Plus, Chorus as an asset is seeing a lot of traction. And if they can reduce that debt over there, they've already become growth stocks because most of the steel companies have reversed cash. So Tata Steel, SAIL, and Jindal Steel become very attractive. Trades below book value, and I think performance of Novelis, which is seeing very good traction in the Canadian front, is the largest aluminium player. I think at 320, 325, Hindalco gives a good opportunity. Now remember, these are high beta plays. When you do get those 20% returns, which we got just now recently, please learn to encash those also. Getting in and out of the market may not seem the everyday butter, but when you do get faster returns, it becomes prudent to book your profits. So be in touch with a financial advisor or a PMS if you do, or a broker, so that they can advise you on sometimes also booking profits because of the volatility of the market. With this, I think I've given you a summary of what globally we are in for. We live in challenging times, we are in difficult spaces. But if you see, look around you, you've already seen one president be assassinated, the other country headless without a president. The third being that the president is in a very weak spot. That's the U.S. And fourthly, we stand out as Modi ji has been a star campaigner across the world. So God willing, because of all our gods and devtas, we are in a very sweet spot. We are not facing the same crisis which is across the board with our neighbors and a large part of the other countries. So to sound bullish at this time is little bit difficult, but believe me, if you weather the storm for the next 4 6 weeks, I think you could be well on way for a recovery in the stock market. With that, I'll give it a little break and hear you guys and take it forward from there.
That was so brilliantly put, sir. That was such an excellent market summary. I had written down so many, honestly saying, I had written so many questions I wanted to ask you. And honestly, more than 80% of them have already been answered. So I'm not looking for more questions to ask you. So that was a brilliant summary, sir. So a few of the
I
questions
will
that I
leave it
still have,
open.
sir.
You ask
One
me.
is, yeah.
Yeah.
All right. So already, so we already touched upon IT, auto, power, real estate, banks. We also touched upon rupee and dollar equation and EU-US equation that we are currently facing. FIS selling also we touched upon. We also saw a good sample portfolio that can be made in the current situations. One of the sectors I wanted to get your thought on was the telecom sector as well, because with Adani, although they have said they are not probably not going to get into consumer mobility, it still means a lot for telecom sector. So do you have a view on that as well, sir?
Yeah, so see, just to tell you, the most hated group, Adani has been the biggest wealth creator in the last 2.5 years. And you can keep putting multiples that the high priced earnings or Gujarati or Modi's favorite, all that is humbug. I think the Adanis are running businesses superb. I think Adani Ports is a world class function. I was recently in Lucknow and Ahmedabad, black collared, black suited people came and asked me how I'm feeling, how I'm, as there's any difficulty. Now, that is called a real efficient management. I think Adani Ports is a no brainer. Even if it doubles from here, it will be still cheap. Yes, they are aggressive because the market caps make you more aggressive, just as Mukesh Bhai, because these people think of, the Gujaratis think big, they think of 130 crore. You cannot think beyond 5, 10 lakh, 50 lakh people. So when you think big, then only you make it big. So yes, Adanis may have shown their direct interest, but look, we are in an environment where Bharti is saying you need a minimum of $5 as an ARPU, which is a minimum. That means at least $350 rupees and as an ARPU, and where you're still at 165, 170. I think there is a lot of room for space for ARPUs to go up. They have also been given that reprieve of paying their debt in installments, both Bharti and Idea, and I think Bharti fits the bill perfectly. They have their subscriber base, their new launches, plus, like I said, ARPUs are definitely headed up because data is the new gold and you cannot do without it. So Bharti and Reliance become a proxy to that. Sooner rather than later, if crude remains here and or falls, I think the windfall tax will be done away with. Reliance is doing brilliantly on all counts, whether it's their GRMs, it's their retail, whether it's the geo part, and for once their dependence on energy is getting divided into other businesses. So Bharti and Reliance remain two of my top picks. You will have to take it with a pinch of salt that even if they do get the spectrum, Adani, it will take time to play out. And till that time, I think both the players and two and a half players which we have, they will be laughing their way to the bank given that ARPUs are headed higher.
Right, right. Brilliantly put, sir. Thank you so much for that analysis. So, next, so this was a little bit about the market scenario we discussed and some sectors that is going on. I also wanted to get on a more basic level of understanding. So, honestly, I always say this in my podcast because it's true that I'm very new to the market still. So, I'm still trying to learn a lot. So, one of the things that I really want to ask you about is how do I, as a small retailer who's still new to the markets, I belong to the COVID generation who entered markets in that bull run and have not really seen the correction that has come through in the recent weeks. So for us, how do we manage our risk? So this has multiple aspects to it. One is the portfolio sizing. How many, like, should it be a consolidated portfolio, diversified portfolio? How many ideal number of stocks in a portfolio? Second is how do we manage our stop losses? Third is you already touched upon key quick profit booking should be a healthy habit. So thoda bahut, if you can give us some clues on risk management, sir.
Firstly, there are no free lunches. Way last 2 years, the Robin Hood traders or the GameStop or the crypto guys, they were really ruling the roost. And it's a very positive sign. When you start off and the markets go your way, the confidence hits all-time highs. But this correction has been furious, sharp, and it has hurt people. That is very healthy because now you'll be, always licking your wound, so you'll know when and what to do. The idea of quick profits is not that I mean it for a longer term portfolio, but you always must be prepared to take money home. If you develop that habit, because I've been in this market fair too long and been through all the mistakes possible, so only mistakes make me wiser. On the other hand, trading stop losses, the type you spoke of, are mainly for traders. I mean, who thought that 420 when Anil Agarwal was upping his stake in Vedanta, suddenly you'll get it at 200 rupees within months. It tells you that the nature of the market was such that a lot of the high flying assets or the Nasdaq correcting 38%. This does not happen every day. So we think that, like I said, a large part of the up and down may have been done with. Now the markets need to stabilize, need more color on the changing environment. And in this period, mutual funds should be the best for a lay investor. Or alternatively, just the Nifty Bs and the Bank Bs, which are index phase fund. The index itself has 23 sectors and 65% of market cap. So you cannot go wrong on the Nifty or the Bank Nifty. That is for the person who's looking for moderate returns. If you are the one who's following Warren Buffett or a Junjunwala, then you have to do the research. I still think the advent of PMS, the advent of professional advisors or brokerages which guide you is much needed. Brokerages, depositories, AMCs, insurance, these are no brainers. You have to have participation because you're looking at doubling, tripling of demat accounts over the next 5, 7, 10 years. So just take your pick, look for good investors and get into it. The idea of taking short term profits when they come is necessary because that makes your base capital and that gives you more confidence. I am not the one who's stuck into that the volatility hurts you and profits which were there suddenly vanish. So I recommend constant profit booking also. But like I said, you have to be invested only to earn profit. If you keep waiting for 13 and a half or 14,000, which most analysts are tom-tomming, then I am of the view first we get to 17 and then we'll talk about the correction.
Right. Brilliantly put, sir. Thank you so much for sharing that, sir. Uh, sir, with that off my head, another interesting thing that I find right now that is probably happening is, and I would love to hear your thoughts on it. So up until now, there was a lot of free money going on with the US, releasing जो COVID को fight करने के लिए they had released a lot of money, and that was fueling a lot of new age startups and जो growth based companies थी. नाउ दैट फंडिंग वो जो टैप था थोड़ा सा बंद हो रहा है, तो उससे मे बी पीपल आर शिफ्टिंग टूवर्ड्स वैल्यू बेस्ड कंपनीज की अच्छे वैल्यूएशंस पे मिले एंड एक्चुअली लुकिंग एट देयर बिजनेसेस. सो फ्रॉम दैट पर्सपेक्टिव डू यू सी हेडविंड्स चेंजिंग अ बिट एंड देन उसके हिसाब से व्हाट शुड बी आवर स्ट्रेटजी मे बी?
So see, firstly, it's a tribute to a lot of the new ones, the Zomatos and the Nikas who made it big to 1 lakh crore. All credit to the promoters and the new age fintech people. I'm an old school guy. I track cement, steel, and other industries. I'm not very good at that, but I give a tribute to them. Now the valuation justification at 18,000 meant that even Paytm got through at whatever price he could. Now whether you like it or not, it plays. There were mutual funds who invested in that. Now how do you justify that? Well, if you saw in the US also, there are these product companies, some of them have which have made it very, very big. And initially, when they started, they also went through the initial hiccups. But like you said, the cost of money being zero, you could put your money in any asset class and hope for returns, and that was coming. So it was too good to be true. The cost of money means now from zero interest rates, you're back to 3.3, and the yield curve from 3.3, by the way, is 2.9, which is telling you that the markets believe that the Fed cannot be too hawkish. That's what the market is telling you. But like I said, these are not to be played by the persons who have low conviction and a weak heart. They have to be in these businesses for the next 3 5 years if they want to hope that these become cash rich companies or start generating cash, because they will continue to be on gross additions of numbers, but they will be burning cash. So the justification on these companies, on the fintech or the new high tech, is not so easy. And you've seen that the sharpest correction has actually happened in that whole arena. On the other hand, if you are seeing Ultratech is available 115 million tons, available at distress value of 5,500, or a Shri Cement at 18,000, these become very, very attractive plays, because once the monsoon is through, these companies have very, very good pricing power, and there's a monopoly which they are in these 5 7 plays. So take your pick. But like I said, if you can justify 5 7% of your capital in these new age businesses, then you have to be patient for the next 3 5 years. Don't track them on an everyday basis, because that way you will only be getting your heartbeat up and down.
That's brilliantly put, sir. सर इसी का ही एक कोरोलरी कह लें या कुछ अलग कह लें, बट अनदर dimension to maybe diametrically opposite dimension of new age growth companies is maybe public sector units. इस पे भी बहुत डिवाइडेड ओपिनियन लोगों की रहती है. सम पीपल आर वेरी मच अगेंस्ट पब्लिक सेक्टर यूनिट्स की. गवर्नेंस इश्यूज हैं, इंटरफेरेंस हैं, सो मेनी रीजंस की प्रॉफिट दे आर नॉट लुकिंग आफ्टर प्रॉफिट्स, बहुत सारी रीजन. ऑन द अदर हैंड देयर इज ऑल्सो अ rediscovery of PSUs may be happening where they are giving breakouts and sabhi ke profits aa rahe hain, sab kuch acha chal raha hai. So what are your thoughts on PSUs as an investment opportunity, sir?
So actually, if you see in the last 2 years, PSUs have been great wealth creators, and that stems from the fact that government decided that this ETF partial sell-off is of no use. They decided to go lock, stock, and barrel, and Air India is done, BPCL Shipping Corporation and Concor is on the block. But look at the returns. I'll just give you one call. Uh, when the index was 18,500, Bank of Baroda was 95, and the index is 16,000. Bank of Baroda is 110. State Bank was 485 when the index was 18,000. It's closer to 500 when the index is 16,000. Numbers are something else. There is a total change in banking thought process. If you heard what Mr. Chadda has done to Bank of Baroda, he's got the maximum hiring of under 25 MBAs, and the thought process has turned from being just a PSU bank to actually becoming a wealth creator. Same is the case with BEL or a Hindustan Aeronautics, which I think you should blindly buy, because defense as a theme and the numbers which Hindustan Aeronautics and BEL have given you, these are constant compounders. There is a lot of PSUs which are up for sale. You've seen today the government passed the act that even banks privatization will be on the cards, which are so IDBI becomes a perfect conduit. The house is always divided. People are, some of them have always been pessimistic, but I think it's the government's approach which says that they are now following the caveat of being not being in government to be not be in business which they cannot manage. So there is nothing better than that. And if they can, with the environment changes, privatize some of the strategic disinvestments, those would be really big events for to which will make us stand out in the global crowd. So similar is the return on some of the PSUs, like I said, which I've named also. I think the PSU basket as itself, the CPSC ETF, if you did a sip in that, for years it was doing nothing. From 14, it's up to 32, 33 at a time when the index has collected sharply. I still think the CPSC ETF is a good investment destination if you're doing a sip.
Thank you so much for that sharing that, sir. इसी का सर एक और if we further take a deep dive into it, defense sector is primarily cornered by PSUs, and I think that is also kind of showing up right now, maybe due to macro factors or in general that is bound for growth. But I would love to have your take on defense sector as a theme as well, sir.
Hello. Your voice is
Yes, am I audible, sir?
yeah, yeah. Now you're audible now. The last part
Okay.
I couldn't get it.
Yes, yes. So I was saying, sir, a little digging deeper into this PSU theme, defense as a sector is cornered by PSUs and is kind of showing up in light right now. And from HAL to so many companies are showing up. So it may be due to macro factors, ki thoda sa war situation, hai, or maybe it's just bound to rise up. It's the right time now. But I would love to have your take on defense as a theme as well, sir.
So, see, this whole fiasco by Russia and Ukraine has actually made some of the American defense companies go through the roof. They are the ones which can become $1 trillion, no? Northrop and the other traditional way. That's how they sell weapons to Ukraine, and they've had 13. They did 13 wars and 13 countries where it's all about arms. I'm not getting deeper in that, but for everyone now, defense will become strategic. HAL and BL are, according to me, the best plays. You can add a Bharat Dynamics. These are monopolies, and they are not from today. They are there from times immemorial. If that Tejas deal for Malaysia gets through, then you can imagine what the workings of Hindustan. So I think that these are very good plays, both BL and Hindustan Aeronautics, and you can add a Bharat Dynamics. They are here to stay, and defense spending for whatever reason is not going to decrease. In fact, it will increase, and awareness globally is now more placed on that. So these are the three stocks which I think can be outperformers.
Right. Absolutely brilliant, sir. Thank you so much for that, sir. Okay. So next question I kind of want to ask is, so you already shared, I think, thoda sa answer I already have for this. I may have the answer for this, but I really want to know explicitly from you instead of guessing it. So there are multiple strategies. One is buy the dip, one is SIP, and one is buying the strength where even if the market corrects, you buy the stocks that are showing strength instead of who have gone for the dip. So, do you have any preference? I think SIP का already हमने discuss किया था, but do you have a preference amongst these strategies? Maybe if I can have your thoughts on it, sir.
So you will have to do the legwork. Look, at a time when the market is gone nothing, Page Industries is 44,000. Hindustan Lever is up 20%. Britannia is hitting recent highs. Godrej Consumer from 6. It's telling you wheat prices are down 40%. It's telling you that Page Industries is no longer a brand which is just by the elite. Even the common man wants to wear something which gives him comfort. My sons will spend whatever they want on the type of undergarments they wear. So look at the change in perception of a brand. On a lighter note, I joined the stock market in '89, and that time there used to be an outcry. You had to shout. I came my first class graduate from Shri Ram College, done my CA intermediate, and I started shouting. So I had an uncle who met me, and he could not speak Hindi or English. He could speak Punjabi. So I asked him what stock to buy, and if anybody understands Punjabi, I'll give you the interpretation. He said पौंड का शेयर खरीद ले 16 साल दी जवान 78 साल दी बुजुर्ग रोज सवेरे शाम लाएगी एक कदी नहीं खत्म होएगा meaning if she's a 16-year-old girl or a 78-year-old lady she has ponds morning and evening this stock will never go out of fashion the stock of ponds was 50 rupees in 88 today it is 55,000 it's got merged with lever so can you imagine and ponds is still used by every most of the ladies and it's still one of the most well valued brands that is the power of brands and that cannot change in a populous country like India so you can take the whole basket and see where the gainers are. You will have to do your headroom and work because it's your money.
Right. Brilliantly put, sir. Thank you so much for that. सर एक और चीज मतलब एक ऑफ कोर्स दिस इज अ वेरी बेसिक क्वेश्चन मे बी अ वेरी लेम क्वेश्चन बट सो if I may have your in your personal strategy, how much do you rely on maybe common sense investing, fundamentals, and technicals? If we can have a division of percentage, I know it's a silly question, but still, I'm very curious to know this, sir.
No, as a trader, I have to be aware of the markets. There is a lot of money which goes on the derivative side. We have options and the whole, but because that is something which gives me the capital to run my house. Okay, I have to be. There are positions which are there which are hedged, and we play on the option side. But that is a constant. That is a trading ambit. I have learned to live with it. So there are, with age first thing I do is book a loss, which most people at a younger age cannot. It's the ego which hurts them. So if you only win, you have to learn to last for the next day. That means you have to take decisions which are going to be very, very painful. And that's what distinguishes a trader from the investor. The investor is putting his money, which is going to look into a business and stay there for time to come. He is not doing the extra gambit. But as a trader, we have to earn the capital to get into markets. So I think the trader is a supreme person. He tracks how many things. In the morning, I write the market mantra at 6:30 every day. Oil, gold, bonds, inflation, rainfall, which side did Biden sleep, which side did Putin get up, and then give you calls on buying, selling, and then hoping that you make money. So it's a very tedious job. You'll become very, very intelligent. But like my wife says, show me the money, honey. So so it's not all that easy. The trader has to bifurcate that losses are to be booked, not profits. And that's a very, very difficult line which will only come with experience. I rely on technicals and DJ because the markets are volatility is your friend if you follow the trend. But on the longer side, I have my own perception of being slightly contrarian and being outperforming, going through the initial pain, but reaping the benefits in the slightly longer term.
Right. Thank you so much for sharing that, sir. Sir, एक और चीज जो I want to ask from you is, so in the recent past, we have had some of the biggest IPOs till date. And of course, they have been, मतलब they have been mulled over and, पूरा stampede हो गया है उनके ऊपर. But what do you see, like, do they, in future, maybe some few years down the line, LIC, Paytm, what future do you see for these big shot IPOs जो कि बहुत धमाके के साथ आए and no, I'm not, I mean, I'm not asking for बहुत stock specific वो वाला, but so I just wanted to know कि ये जो इतने बड़े IPOs थे, what's your view on that?
So, say simply like an LIC, I think the change will be in the management outlook, the transparency, and the advent towards go towards more slightly more riskier returns. So, ULIPs and their division of not being just on fixed income will be the change. We will have to wait for results and returns being back ended. We know cost structure is such that the new private players in the insurance are making a lot of money, and I think insurance is a no brainer given the our population density and the need for insurance, whether it's medical or auto or life, all three will go hand in hand. Insurance is a very good long term play, and you would rather make more money in some of the insurance companies than in a fixed deposit. LIC, like I said, is a strange phenomena because the government wanted to encash. It owns about 4% of the entire equity of the country. It's the second largest bond holder. So if the market is going to go back to 18,000, LIC as a NAV will also rise. But like I said, this was a tough time for it to be priced. On the others, like I said, you commit 4%, but I think Zomato or a Paytm or this over a period of time one of these could turn out to be a very, very good investment.
That's amazing, sir. Thank you so much for sharing your views on that, sir. Okay, so sir, of course, you have given us so much of your precious time, and we are kind of hitting a hard stop for a time. But I would, before we part, I would love to have one piece of advice, maybe one concluding remark for the COVID generation of markets like me. Already risk management we of course touched a little bit, but थोड़ा सा एक advice हमारे लिए, how should we go forward? What should we be dealing with in the market? And how should we go forward from here?
So, like I said, segregate the trader in you from the investor. The trader needs to make capital because then only his money comes, and trader has to follow the trend. Sell weakness, buy strength. Don't go by any TV analyst. Look for your own area of comfort, how you trade. If you do pairs or you do options, even more better, but learn the nuances. Don't just go in blind fated. Secondly, look what your conviction and your DNA is. If you can't trade, it's better to invest and wait for your returns to come. Patience pays. But please don't miss the Indian bull market, which I think is just going through a sharp and a much needed correction. You have a very, very long time. In my 30 years, I've never seen the type of adulation or the type of response which I do get. It is a very, very exciting feeling. But I think we have just hit at the tip of the iceberg. There are miles to go for the Indian market, the retail investor, and if you have weathered the storm of 3 lakh crore of sale, and still corrected about 12%, then look for the upside. If just 10% of that money comes back from the FIs, which is inevitable, today, nahi to tomorrow, nahi to next 2 weeks or next 2 months, that money has to return. So I am extremely bullish on the slightly longer term, and I think that this is the best opportunity which could have come, given that the whole world is crumbling around you, and we stand to be one of the better players or better performers or better outperformers in the near term.
Thank you so much for that, sir. This is brilliant advice. Thank you so much. And I would, before we part, I would request you to please allow us to host you again sometime and learn from you more. I have unlimited number of questions, by the way. I could go on all night, but I'm sure if I do that, you won't allow us to host you anymore. So that's why I'm stopping here and asking you to please allow us host again, sir.
Yeah, it's been a pleasure. Thank you all very much. Thank you for all the listeners, and wish you all good health, wealth, and please do buy your good stocks. Okay. Thank you all very much.
Thank you so much again, sir. And thank you, listeners, for sticking out with us. We have almost 1,000 listeners right now. Have a really good day tomorrow, profitable day tomorrow, and a really good night now. Bye bye.